Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Amazing stuff. Good to have you guys here. Welcome again to the channel. Now, for those of you who are new, well, this is the Greedy Trader channel, where we talk about all things market profile. Now, of course, on my screen, you're looking at a candlestick chart. However, I will be showing you what it looks like on a candlestick chart versus what it looks like on a market profile chart. Without wasting too much time, I want to get into what is a very, very, very dear topic to my heart, and that is, what is trading? Now, I'm not only just going to talk about what is trading, I'm going to talk about all the stuff that comes with it, and I'm going to give you guys a bit of a reality check. I've been in the business for 15 years plus, on both the institutional side and the retail side, like the rest of you guys. I've experienced this from both ends. Now, in this video today, I'm going to show you via example. That's one of the things I like to do in this channel, is show people via example. I'm big on proof, right? So if you've seen my mentorship program, which is free right here on YouTube, there is no money charging. You just come in, go through the mentorship program, and of course, if you feel like you definitely think I'm the guy you want to be talking to, then that's not a problem. I've got a free Discord server. Jump in there, join everyone there, DM me, whatever, right? But one of the things that I'm going to do today is going to give everyone a reality check via showing you what's happened in the market, how we've looked at it, and I'm going to give you some really good strategies. What I always do here is reinforce, right? I reinforce all the time the same thing over and over again. And that's because a lot of people are really struggling to get this, right? They're really struggling to understand what it is they need to be doing as traders. I don't care if you are a new trader, you've been trading for 200 years. It makes no difference to me. Right? There are people who are going to be successful at trading if they come in with the right attitude, with the right tools, and with the right mentorship. They're probably going to start making money maybe in the next month, right? Because they have correct direction. And then there are people who are going to spend maybe 6, 7, 8, 5, 4, 3 years trying to work this out because they're going down the wrong path, right?
Help me, Jesus! Help me, Jewish God! Help me, Allah! Ah! Help me, Tom Cruise!
But let's talk a little bit more. So before I get into all the technical strategy, so guys, I promise you, stick around. This is going to be really good. You're going to learn so much. I mean, and again, guys, for those of you who don't know me, just go back and look at some of my other videos, right? Some of the things that I've said that have turned out to be the obvious reality. I'm a broad spectrum trader. I've traded everything. So, you would see, for guys who follow me on the Discord, you can see that I sell premium. Option selling is a big part of the income I make. I also invest in a portfolio. I manage a portfolio. So, guys, I'm not new to this. I'm not from that crazy world of, like, oh, I'm the top prop trader doing an interview in some podcast about how much money they can take from their subscribers. I'm not that guy.
No, sir! Not me!
If you're in this channel, it's because you really want to learn. And everything I do here is going to be highly educational. I don't deal in sensation. That is not me. I don't deal in the extravaganza. That is not who I am. If that's what you're looking for, then I can understand entirely why it's not working out for you, because that is not what you're supposed to be looking for. Right, let's dive in. Let's talk some substance, right? So For those of you guys who are already familiar with market profile, we'll come to it. But for now, let's just pop on this candlestick chart here, and let's have a conversation. Now, for those of you guys who saw my previous video on cable, and you would notice by now, so if you're a regular watcher of the channel, you would notice that when I open a chart, I generally only open cable and occasionally crude oil. The only reason I open crude oil is because I want to give you guys an understanding of how you would trade a commodity market, and crude is one of the thinnest markets you can trade. So it's crazy volatile in the US session, and it's dominated by the biggest players in the oil business, right? So if you can trade a crude market, you can pretty much trade any market, right? But I really only ever put cable on because when again, I know you guys love Forex, right? I'm a huge in the equity trading space, but I cut my teeth in Forex, right? So I know you guys love Forex, and I keep saying to traders time and time again, Forex is hard. It is difficult. It is not the same as trading stocks, right? In my opinion, trading stocks is way easier. And I always say, if you're a beginner in this business, then you probably want to start out trading stocks. You definitely don't want to start out trading Forex.
Oh, no way.
Right? And the reason for that is that whilst Forex has been gamified, it looks very easy to trade and brokers are really promoting it. You don't see that with stocks. And I'm also aware that globally, market accessibility is abysmal. Can you believe it? There's some countries still in the world who don't allow their citizens to get access to assets or liquid assets in the marketplace. That's insane, right? So I know there's a lot of financial restrictions, so I'm not naive. However, if you're going to learn, it's best to start with stocks, and there are brokers who do offer CFD stocks on their platforms. Yes, it costs a little bit more money to trade those. It's not the same as, like, I use IB as my broker, Interactive Brokers. So it's not the same as having an Interactive Brokers platform, and then you're paying these ridiculous amount of fees for, you know, owning hundreds of thousands of shares. It's not the same, I know. However, if you're learning the trade and you're trying to invest, it is a small investment. It's a small price to pay to keep your money in your pocket. Right? That's just how I see it. But anyway, I know everyone comes to Forex, and that is totally cool. So since I have the knowledge and I have the experience with Forex, I opt to show you a lot of examples via Forex. Now, the concepts I show you here are applicable across all markets. It doesn't really matter if you are a Forex trader or you are a stock trader. It's the reason why, as I like to call them, asymmetrical markets are easier to trade, is largely because they're highly regulated and there's a lot of reportability, which we can't really say for the Forex market. For example, it's a decentralized market to some extent. I always say that when you look at it on the surface, it's really all centralized. We got one major market maker dictating how things work in the entire market. But besides the point, when you're in Forex, I'm going to use the example, it's decentralized. You've got insider trading is legal in Forex, and these are the things that obviously in the stock market are not, they're just not legal. Now, not to say people won't do them, but they're not legal, right? So there's a certain mode of operation. And I also like to think that the most inexperienced people tend to attack the stock market first. Right, especially in the United States. In Europe, maybe not so. The most inexperienced people go towards Forex because that's pretty much all they have access to. So what I always say is start with an asymmetrical market before coming on symmetrical markets like Forex indices or commodities, right? But anyway, besides the point. So today, let's take a look at what happened in cable, and we're just going to reinforce some of the points that we've discussed in the past. So the first point being, and I say this and I've said this time and time again, avoid trading the European opening sessions if you can. Let's take a look at what happened today. So we're going to use the simple concepts we've always used. Liquidity concepts first. So concept number one, what are we looking for? Where are the liquidity highs and lows? What do we mean? Where are the most stops gathered? Essentially, if we're thinking about this from the central order book, where the most passive order is going to be? Well, they're going to be at the highs and the lows. So that's where you're going to find stop losses. In the case if you're going long, you'll find sell stops at the bottom, right? And if you're going short, you'll find buy stops at the top. Some of these are going to be stop orders. to execute into the trade. Some of them are going to be stop loss orders. So they're going to be either buy stop loss or buy stop orders or sell stop loss or sell stop orders, right? So you're going to find these at highs and lows, right? So we're going to have short-term liquidity highs and lows. We're going to have slightly longer-term liquidity highs and lows. So step number 1, where's the liquidity short-term? We're looking at a 1-hour chart right now. So this is pretty much anywhere from an intraday to a swing position, right? So by that we mean it could run over 2 to 3 days, or it could be a trade in a day. I prefer this time frame, and I always say this, that there are people who are telling you trade 5-minute time frames. What I say to those guys is good luck. Good luck. If that's what you want to trade, you know, go for it. Each to his own, but good luck.
And may the odds be ever in your favor.
If you're a new trader, trust me guys, just trust me. You don't want to be doing that. So I like to look at the 1-hour time frame. So I can see where the short-term liquidity is, and I can see where the long-term liquidity is. What do I consistently say to traders is do not trade. Try to avoid trading the European session. All right, so let's look at an example. Short-term liquidity high, short-term liquidity low. That liquidity high was posted at 11 o'clock in the evening. This liquidity low was posted at 4 a.m. in the morning, and that's UK time. So this is an Asia set. This was the entire Asia range. Now what's happened is that as we entered into the European Open, it's not quite, for me, 7 a.m. is not quite the European Open, it's 8 a.m. But some of you would say it's 7 a.m. That's perfectly fine. Each to his own. Right, so 7 a.m. we see the market run up and take some liquidity above the Asia high, right, which is 11 o'clock. So we can see that here. And then we pulled lower, and then we took the liquidity below the Asia low. Now, I don't know about you, but at 7 o'clock in the morning, I'm definitely not positioned to make a trade. This is another reality check for you guys. People who get up at 5, 6 a.m. and lose their life in order to watch for a particular trade occur, liquidity is going to happen in the late European Open, that's 8 a.m., right? Or it's going to happen in the New York, NASDAQ, or Chicago, which is the US, which is the best session to be trading in, but we'll come to that. So avoid the European session just because you're going to get a much bigger session later on that's going to have a lot more volume coming into it, and it's probably going to negate most of what you've strategized in the European session. And there's this huge lull period in a European session, which is like between 10, 11, let's just say between 9 and 11, where not a lot happens, and it's specifically quiet between 10 and 11. And then by 12 noon, we are pre-market, right, for the NASDAQ, right? So we start pre-market, right? Pre-market is open from like 9 a.m. in London, but the actual volume starts to seep into the pre-market from 12 noon UK time. So that means you're going to start to see a little bit of movement in some of the currencies, for example, because they're 24 hours. They don't need to worry about pre-market. You start to see some trades show up, but it's still pretty early. The big one tends to be the New York Open for currencies. That's because a lot of the data happens around about then. So there's a lot more volume starts to creep in, a lot more volatility. But the really, really big moves, they start at the 2 to 3 p.m. window. And that's because we have the NASDAQ opening at 2:30, right? So that's the regular trading hours for the NASDAQ. And then at 3 p.m., we have the Chicago Mercantile Exchange things kicking off as well, right? Because that's about 8 a.m. Chicago time, right? I think they call it Central Time, right? So you're going to see a lot of movement, and that plays into the indices directly because futures are traded on the CME, right? So if you've got an S&P 500, you're going to get the biggest movement there. And also, for those of you who don't know this, and a lot of the stock trading guys will tell you this, is that you've got the golden hour, right? Which is in the US, which for me is about 4 p.m. UK time, but I think for the Americans it's about 10 a.m. They call it the golden hour because you tend to get a lot of the reversals coming between that 3:30 to 4 p.m. window, right? So if there's going to be a counterplay, they tend to happen then. So understanding this is crucial to understanding what trading really is at the core, right? It's about understanding the other players. It's understanding the makeup of the market you're trading in, right? So that's one thing you want to bear in mind, and that's why I say stay away from the European session. It's not because of course there are opportunities, but you're likely to get caught up. And let's look at an example of this. So we've already described that push up, the liquidity sweeping or grabbing or whatever they call it these days, but really we're just finding orders. So we see that liquidity gets found at these points, and then you can see us close back in. So we got the short-term liquidity low here, right, in Asia. We go under, bit of a fake out here. So again, I always say to guys, you don't want to be short in the hole. So essentially, if you're trading a liquidity low, you don't want to be put in a short position in anticipation of a breakout. You're going to get destroyed. And that's because at liquidity lows, you're going to find more buy orders, then you're going to find more sell orders. So it makes no sense for you to put a short at a liquidity low, as it doesn't make sense for you to put a buy at a liquidity high. So at this stage, you can see that we reversed back up at 9 a.m., right? So we had the 8 a.m. flush, 9 a.m. reversal, we closed on the high side. Now, most people, the only option you have is, because we've traded the liquidity low and closed up, is to be long if you're going to trade on the day. Now, what do I say is that, is the market trading now at a premium or a discount? Well, for me, it's trading already at a premium because we're near a liquidity high going back to the 14th of February. So it's at a premium for sure. So if I'm long here, whilst it gives me a short-term liquidity opportunity, maybe back up to the liquidity highs, this is not a long-term trade. It's not something I'm going to sit in if I did that, because I'm playing against a short-term liquidity in a session that could drag on, because right now it's 12:30 as I'm doing this video, and you can see we're dragging on, which tells me that there's a good chance that this picture could change dramatically coming into a US session. So I'd rather wait for us to see the NASDAQ open, which means if we're going to go higher, it will be then. We're likely going to find liquidity up at these highs, and then we're going to sell lower. And if I'm going to get into a trade, what I'm looking for is for us to find liquidity, break back in to this liquidity high-low range, right? And then I'll be short at a premium, which is why I want to be. The market's is trading expensive. I want to be short there because I'm getting the signal that that's what's going to happen. And then what I'm looking for is to cover at the liquidity low, which will now post it at 25.75. So you guys can see the picture at this stage that yes, you could be correct on your trade and make money to the upside, but then you're taking a lot more risk to trade a short-term liquidity low. So again, it's all down to prioritizing the trades that you want to be in. So what's my game plan now looking at this? Well, I want to be careful. I want to trade short when I see the opportunity at the liquidity high, or I want to trade long when I see the opportunity at the liquidity low. And I guarantee you guys, we're going to get one of these by the time we turn Monday. Something's going to happen. And look, we have liquidity highs even higher, right? So if we draw this board in, we can see that this pattern is constant all the time. It's nothing changes. So we trade up a liquidity high. We act like we're going higher. We break down. You go short, right? We traded low. We didn't quite hit the liquidity low. We hit that here. We traded back up. And now we're sort of recovering that. But if you look further back in time, you can see there were other liquidity lows. So we need to be mindful of that. Now let's have a look at this. We're seeing the same thing on a profile chart. It's exactly the same. So we have our liquidity high here. We have minus development here. So there's a good chance that our resistance, and this is the stuff you can see on a market profile chart that you can't see on anything else. There's a good chance that we have some resistance at 26.39, which if we collapse this, that's our value high, right? So right there, right? So we got a slight offer stack very wide value area. We've already hit the minus development here initially, and then we sold out. We've run into bid stacks down here, right, where we supported. So this is a bid stack. We can see historically as well, there's a bid stack here. And now we hit that, went back up, traded the gap, sold off at the liquidity high, came back down again, right, bounced off the bids again, and now we're acting like we're going up. There's a high chance that we're going to trade the liquidity high. If we drop down, we have a bid stack here, right? So if we split this, we can start to assume that, well, we're probably going to struggle, right, to get under. But if we do, I'm looking for the liquidity low. So I think the trade rests in the ability to sell at a premium when we achieve that. Because we have minus development here, there is a chance that we will never be able to break that, right? But we don't know. And that is the point, guys. We don't know.
I have no idea!
Because the major session of the day has not yet resumed or hasn't convened. Do you want to trade ahead of that? Or do you want to be the guy who waits it out? So again, going back to the point, what is trading? Trading is the ability to be able to analyze, synthesize this information and make decisions in it. And you're going to be doing that largely in a vacuum, right? So it's a reality check, guys. So if you want to be traders, you have to understand that you got to understand this stuff. If you don't, you're going to have some serious problems. Because if you don't understand how to analyze and synthesize information like this, then you're going to make poor decisions. And I keep reinforcing these simple points, and that's all the reason people lose money. They're trading the wrong times, or they're trading poor trade locations. They don't know that that's a poor trade location, but that's what they're doing. And it goes on and on and on. Anyway, guys, till my next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?